Wall Street is experiencing its worst slump since the Trump era began, with markets reeling from a combination of political uncertainty and economic turmoil. The Dow plunged nearly 900 points, while the NASDAQ suffered its most significant drop in over 2 years. Tech giants like Tesla, Apple, and Nvidia led the decline, with very few companies managing to stay in the green. This market reaction isn't just about numbers. It's a direct response to leadership decisions and policy implementation that's creating waves of uncertainty across the financial sector. Trump's approach to economic leadership, once his claimed strength, is now being severely tested. His recent Fox interview with Maria Bartiromo revealed a striking lack of clarity about potential recession risks, leaving investors and markets without the reassurance they desperately seek. The market's trajectory tells a compelling story. After an initial post-election boost, we've seen a consistent downward trend, reflecting growing concerns about tariff policies, government cuts, and international trade tensions. The impact extends far beyond Wall Street. It's affecting retirement accounts, small businesses, and everyday Americans. The administration's handling of various sectors, from veterans' healthcare to international trade, has created a ripple effect of uncertainty. The Musk Cuts program, initially presented as a streamlining measure, has faced significant backlash, particularly in town halls across the country, where citizens voice their concerns about essential services being compromised. The situation is further complicated by Musk's unique position as both a government official and private sector leader, raising questions about conflicts of interest and effective governance. The response from the business community has been particularly telling, with major corporations warning of adverse effects and periods of great uncertainty ahead. This isn't just media speculation. It's the collective voice of American business leaders expressing genuine concern about the direction of economic policy. The impact is being felt across various sectors, from agriculture, where soybean exports have shifted to Brazil, to construction, where immigration policies are affecting labor availability, to technology, where international contracts are being questioned due to policy uncertainty. The administration's approach to government agencies has also raised serious legal questions, with courts beginning to push back against what they see as overreach of executive power. The recent ruling regarding the National Labor Relations Board members' reinstatement serves as a reminder that presidential power has limits. The broader implications of these policies are becoming increasingly clear, from measles outbreaks linked to health policy changes to concerns about airline safety due to regulatory shifts. These aren't just isolated incidents. They represent a systematic impact of policy decisions that are now being reflected in market performance. The response from citizens has evolved from initial support to growing concern, particularly as the real-world effects of these policies become apparent. Town halls across the country are filled with voters from both parties questioning the impact on their daily lives, from healthcare access to economic stability. The administration's response to these concerns has largely focused on messaging rather than substantive policy adjustments, creating a disconnect between political rhetoric and economic reality. As we look ahead, the markets continue to signal serious concerns about the current trajectory, with investors and businesses alike seeking clarity and stability in an increasingly uncertain environment. This isn't just another market correction. It's a clear indication that the intersection of policy, governance, and economic stability requires a more measured and thoughtful approach than what we're currently seeing.